Thank you so much for joining me today. Ford just reported their Q4 2022 earnings, and they were ugly. Don't take my word for it. CNBC headline. Ford posts ugly fourth quarter, full year net loss as execution issues plague production. A couple headlines here. Look at my new mouse. It's much bigger now. Hopefully you can see it better. Ford Motor reported an ugly fourth quarter. The automaker missed Wall Street's earning expectations and fell short of its own full year guidance, citing execution issues that plagued production. Some of it is due to basically supply chain challenges. Some of it is attributed potentially to their EV ramp for the Mustang Mach-E and the F-150 Lightning. But the general sense here from Ford is that, hey, we were having some issues, and there was about $2 billion on the table that they left. Here's an excerpt from the CNBC article. Ford Motor reported an ugly fourth quarter, missing Wall Street's earnings expectations and falling short of its own full-year guidance by $1.1 billion as the company reported execution issues that plagued production. We should have done much better last year, CEO Jim Farley said. We left about $2 billion in profits on the table that were within our control, and we're going to correct that with improved execution and performance. Honestly, props to Ford. They came forward and said, hey, we had some issues. We could have made $2 billion more for the year, and we should have done a better job. Good contrast versus the GM earnings call that I covered on this channel earlier. It looks like Ford is open about some of the challenges they have, and they're not trying to, I don't know, they're just more forthright from the language that I'm seeing. Not accusing GM of anything. I just feel like Ford is more forthright. As of the time of this recording, Ford in after hours is down 6% based on the news from their earnings. And one of the things that's very interesting about this earnings report right now that we're going to go through is that this is the last quarter, where Ford is going to report their Ford business as one entity. And starting in Q1 of 2023, which will be the next quarter, there's going to be two distinct earnings reports, essentially, or they're going to outline two different businesses. It's going to be Ford Blue, which is going to be essentially their gas car business, and Ford Model E, which is going to be their electric business. So it's going to be super interesting. There might go my dogs to see how that sort of displays the progress that Ford is making, shifting into the EV sector, which by all signs appears to be the clear next cycle for automotive. And we'll be able to see from the first legacy automaker exactly how they're performing, and it's going to be a great barometer for other legacy automakers, because it looks like Ford is one of the very few legacy automakers outside of the Korean companies in Kia and Hyundai that are really taking this seriously. So I'm actually super excited to see their Q1 earnings. Real quick, if we look at their the net income statement here from Ford, almost a Tesla. Total revenues in 2022, $158 billion versus previous year's $136 and previous year's $127. A lot of it is driven by automotive. Of course, a lot of that is also driven by the fact that we had inflation, so revenues are up based on the higher car price. Cost of sales, you can see that they also increased basically proportionally with revenues. It gave them a total cost and expense of $151 totaled up. However, if you look at the bottom here, which is the full year net income, basically how much money the company made in the full year, they lost $2 billion compared to 2021's $18 billion they made. Now that looks like a crazy number, like $19-20 billion gap where they're losing money technically as a company. However, the reason why that happened is in 2022, Ford took a pretty large adjustment based on their Rivian mark-to-market losses and their Argo investments. This is really their investment that they made in Rivian. Earlier, I think 2019 is when they first invested in the company, and Rivian has been taking a huge beating, and they've also sold some stocks. So they have to take a correction based on that. And then Argo is a an autonomous company that they partner with Volkswagen that they're choosing to just basically exit and wrap up. So they had to take some losses from there. Those two losses really totaled up to around, if you add these up, about $10 billion of the special items here. And that's really what forced them to take a loss in 2022. If they didn't take those items, really they would have been much closer to about, call it $8 billion in net income. However, that would have still been significantly shorter than the previous year's net income of $17 billion, about a $10 billion gap year over year. In case you were wondering, Rivian Automotive, this is how it performed this year. And for the last 5 years, but really they IPO'd in November 12th, 2021, which is a little bit over a year ago. They started at a price of $130. Now they're at a price of $20, down over 80%. That time period, one of the main reasons why they took such a big loss in 2022 was this investment. If we look at their cash flow from operating activities, what's interesting to see here is basically, if you're not familiar with the statement, is how much cash basically exits the part of the operation specifically. So how much cash is the business actually generating? In 2021, they were able to generate almost $16 billion from operating activities. Doesn't include anything from financing or investments. This is just from basically building cars. However, in 2022, they were only able to generate about $7 billion of cash from their business. Compare this to $25 billion back in 2020. And again, the big reason why is their net income, how much the business generated from a profit perspective, is really what one of the primary reasons why their cash flow from operations was so low compared to the previous 2 years. If we were to continue the trend that Ford has right now from 2022 through 2020 through 2023, you can see that the cash flow from operations started at 25 for the full year 2020, 15 billion for the full year 2021, almost $7 billion in 2022. Again, includes that Rivian and Argo investment that they had to take a loss on. But if this trend continues for whatever reason into 2023, cash flow from operations for Ford would actually be negative, meaning that they would actually be burning cash in 2023 versus 2022. Which is obviously a huge problem. If you're enjoying what you're watching so far, I would love it if you throw me a like. It helps the YouTube algorithm show this to more people. Thank you so much. Some of the breakdown from the Ford earnings deck that I really want to highlight here. This is the North America quarterly wholesale units revenue, EBIT, which is earnings before interest and taxes, basically how much money the company is kind of making, and then the margin percentage based on that. You can see that in North America, wholesale units, which is basically how many units they sold, it's growing from Q3 21 through Q4 22, although it's starting to kind of slow down here a little bit, but it's still an upward growth trend. Revenues are up, obviously. Some of this is due to inflation. And EBIT, which is, again, how much money they're making from that business, seems to be in line with Q2. And margins are somewhere around, call it, average of 8%. Q4, they ended at 9.7%. However, what's very interesting here is that Q4 number, 635,000 units in North America. If you contrast this to new vehicle availability based on dealer lots as of the end of November 2022, and sort of extrapolated out into the end of 2022, should be similar. Both Ford and Lincoln have dealer inventory supply in the United States that is above 60 days on hand, which is considered healthy supply. So this growth in Q4 of units was basically placed on dealership lots that were already technically healthy. And so it's a similar dynamic to what GM appears to be doing, which is a little bit of channel stuffing, which is moving units from the factory to a dealer lot that already has surplus inventory. And so if that wouldn't have happened, if they didn't have a dealer network to essentially dump inventory on, this number probably would have been significantly lower. But fortunately for legacy car companies, they can do this. But now the dealers are going to have to figure out how to sell these cars. So good luck if you're a dealer. Europe, this is the Europe performance. You can see in Q4 was actually a little bit less than Q3, and they took actually a pretty big loss from an EBIT perspective of about 400 million, negative 6% margin based on vehicles sold in Europe. That's not a great sign. Revenues are stagnating here. You can see Q1 through Q4. And then the last major market for Ford, you can see China, Q3, 162,000 units, down to 117,000. For the JV volume, the rest of the volume is 114,000. And then you can see the revenue steadily decreasing for the business. And you can see that they're also losing money technically on the businesses there as well. So a 60% EBIT margin and $200 million loss in China. So from the looks of it in Q4, both the European business and the Chinese business for Ford, they both lost money. And these three are the three biggest markets. There are other markets as well, international, South America, and others. But the three biggest markets, they are not performing super great, unfortunately. There's also one part of the business that Ford has, which is Ford Credit, which is very similar to GM Finance, essentially like the division that Ford has where you can buy a loan or buy a lease when you purchase your vehicle. And they also had a slide for this, but I do want to highlight this piece because it's sort of talking to the overall trend we're seeing in depreciating asset value for cars, not just because of this inflation, but potentially other factors as well. In Q2, the average sale, call it the auction value for a Ford car, was roughly $34,000, all the way down to $29,000 in Q4. However, because of the depreciating assets for those cars and sort of how the loan business works and the lease business works, kind of complex, but essentially they only were able to make $200 million from that business in Q4. Whereas if you compare it to the rest of the year and late 2021, they were making significantly more. Curious to see how this trends into 2023. As far as their outlook goes for 2023, they do expect a mild U.S. recession, but they are projecting their industry volumes, again, like GM did, on about 15 million units sold in the U.S. versus previous year's 13.9. So they're expecting the U.S. market to grow from a vehicle perspective, and they're guiding for about $6 billion in total free cash flow, which is basically how much cash the business can generate, and the EBIT, which is that, think of it like that net income number-ish of about between $9 to $11 billion, which if we compare that back to the, the 2021 numbers, was 15 billion. So they're still projecting a loss for that part of the business. Oh, sorry, a decrease, not a loss, a decrease year over year. Excuse me. One of the things that they're really touting now, Ford is they really want to start investing into the future of the business, and sort of they have a three-prong approach. They're saying if we take our foundational strengths, which is basically our iconic nameplates, which is things like the Mustang and the F-150, which is really what sells now, Ford sells out nowadays, and their Ford Credit, which is their financing arm for all their vehicles, and then they add enhanced capabilities like integrated hardware and software. So very similar to what Tesla does from a vertical integration standpoint, where software and hardware on their cars play very nicely together, and connectivity, which is like software updates and other things with media and maps and all that stuff. So they think that those two things combined can get them to an expanded total addressable market, which is what TAM stands for, and value creation around electrification, which is basically their electric vehicle lineup in the F-150 Lightning, the Mustang, electric vans, and the Ford Pro, which is basically their commercial vehicle segment. So they're trying to put together a story that says, hey, these short-term losses and short-term pains are because we're really trying to prepare for the future of the vehicle market, which is going to be, for us, really shifted around electrification and moving towards the commercial vehicles as strong as humanly possible, which I honestly applaud Ford for at least trying. They're trying to move forward, which is great. However, I do want to highlight why this is probably going to be very difficult. This is Ford's, essentially their balance sheet, which is what their assets are and liabilities are, how much cash they have, how many things they own, and how much things they owe. They own about $255 billion of total assets. And a lot of this is tied up to the legacy part of the business, meaning the gas car business, the F-150s, not the Lightning, but the regular, and every other sort of part of the business that have the gas cars, that build the gas cars. And they have $212 billion. I don't know why my cursor gets all weird down here because it's out of frame. $212 billion of liabilities, basically how much they owe on different things. The big thing I really want to highlight is the total long-term debt. So they owe $19 billion from the company excluding Ford Credit. So $19 billion from the non-credit arm and $69 billion for the rest of the business. So those two numbers combined is roughly $90 billion in long-term debt plus other liabilities as well. So as they're looking to transition into the EV segment, they're going to have to carry all this debt with them forward to make this happen. And if the rest of the auto industry and the car business, the gas part of the business, the gas car part of the business starts to really depreciate in value because EVs become the new technology, how's that going to impact their ability to pay down this debt when it's tied to factory equipment and vehicles that become increasingly less and less valuable, especially as the EV market takes hold? So something to consider. So the questions I want to leave you with for this video. and I'm really excited to see how Q1 develops here. Can Ford grow in 2023 like they're projecting to do through a bigger total addressable market? Hopefully they can do that. And then the second question is, do they have enough EV capacity? So can they do this while shifting to the new cycle of vehicles, which from my estimation is absolutely going to be EVs, especially in the US with the new EV tax credit. So for Ford, these are really the two big questions. Let me bring myself back here. And honestly, I am excited to see how they transform through this time period. I do think out of the three US car makers that are legacy, Stellantis, which it's hard for me to call them a Stellantis, I'm going to call them Chrysler, Chrysler, Ford, and GM. I do believe Ford is absolutely the one that really gives a crap about the transition here to EVs. But as you can see from the investment they made in Rivian, which is an electric car company, it's not a guaranteed win. That investment went down 80%, and they had to take a loss this year because of that, or rather in 2022. So what are the other things that Ford is going to stumble into as they start transitioning to EVs, and can their expertise translate to the EV technology? So if you follow my channel, you probably know that I think that it's going to be extremely difficult for them to do that. And if they do succeed, they're probably going to be significantly smaller than they used to be. However, I don't want this to be any investment advice. I just want this to be a coverage of what's going on in the auto market, because I really do believe things are changing, man. Things are changing. And I think the change is going to come way faster than most people think. So hopefully this video was informative and helpful. Do let me know what you think in the comments. How do you see Ford playing out? What did you think of these quarterly results? Are you excited to see their Q1 earnings report as two separate entities between Ford Blue and Ford Model E? I personally, I'm so excited to see what that looks like. Just as a freaking numbers nerd, I'm curious to see what's going on there. Thank you so much for watching this video. If you want to talk about this with my private community, do consider becoming a Patreon. I have a link for that in the description below. And you can also click down here somewhere on the join button to join through YouTube. You'll get access to our private Discord, where we have conversations around these topics and many more topics as well, to try and figure out what the future looks like. So consider doing that. If you want to support the channel by purchasing some merch, just like the hoodie I'm wearing right now, it's freaking cold in Texas right now, in the Austin area, do consider doing that as well. I have a link in the description for that. And lastly, I also have a code for Athletic Greens, which is a supplement I've been using for years. I take it every single morning. My wife does as well. Honestly, probably changed my life for the better. Just a lot of vitamins and minerals that I've been missing, and I just feel more energetic and more healthy altogether. So I do consider doing that as well. Thank you so much for watching. We'll see you in the next one. Take it easy, everybody. Bye-bye.